Hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is November 14th, 2022. And Bitcoin, as well as the rest of the cryptocurrency markets, just bounce off a very crucial support. People, you need to understand just how important this support was. We had to bounce off of it, okay? Obviously, the technical showed us that it was very likely, but still, it was very necessary, okay? And because of this, we can expect very simply, okay, if this is a three-wave corrective move, okay, and this is a three-wave corrective move, counter-corrective move, sorry, what we can expect is for this to be impulsive. If I had to make this live stream analysis in 1 minute or less, that would be it. This is an A wave. This is a B wave, a counter-corrective three-wave move to that flat three-wave correction. And this is your impulse, your C wave. This is very exciting, okay? That's from the Elliott wave vantage, okay? Just looking at basic support and resistance, you're at, let's zoom out for that. Okay, basic support and resistance. You're looking at this massive channel. Okay, there we go. You're looking at this massive channel that you've been in for 150 days or so, okay? That is the bear market reversal channel, if our analysis is correct, okay? After the drawdown in the bear market, you spend 150 days or so consolidating to reverse, okay? You dip down below, which again, I've said this yesterday, I said this the day before yesterday, not necessarily bearish. Lots of things before they reverse, they dip down below the range of accumulation to grab any extra liquidity below the trading range, okay? Because it's very important to understand that there's always going to be some liquidity beneath the trading range. There's going to be liquidity above a trading range, and there's going to be liquidity below a trading range. And you can say that if you want to look at it in some ways, trading is all about liquidity, okay? Obviously, we use Elliott wave theory on this channel, and that works fine. But if you wanted to just look in terms of liquidity, it's all a liquidity game, okay? You've accumulating liquidity, and before a markup, you want to grab any extra liquidity, okay? The Wyckoff people would call this a spring, okay? If you look at Wyckoff analysis, this is common actually. You know, let's actually do that. Let's take a second and look at the Wyckoff accumulation, I believe, pattern, okay? That's just the schematic. Amazing Videos of the World says when there will be altcoin bull run. That's exactly what we're going to address. Hello. Okay, let's look at the Wyckoff accumulation schematic, okay? Guys, I hope you're having a great day. It's Monday here in the DC area. It's not too warm. It's not too cold. It's just about right. Okay, Wyckoff accumulation. Let's have a look at this. All right, here's the one. Okay, this is one of them. Is this the one we want to look at? Let's just go to the website itself. Okay, here we go. If you guys don't know anything about Wyckoff, even if you're an Elliottician, definitely recommend looking it up and just doing a little bit of you know, some background. It shouldn't take too long, but it's important to just be well versed in technical analysis. Obviously, you want to specialize in something. You want expertise in something, because it doesn't really matter what you use as long as you know what the hell you're talking about and you really know your trade, right? Whatever you use, if it's Wyckoff, if it's Elliott, if it's basic, support and resistance, know it well. Don't try to be a jack of all trades, but it's nice to see confluence in everything that exists, okay? And so this is what I'm talking about, the spring. Do I have a pen here? Let's see. Here, let's see. Seeing if I can get away with this. Okay, here we go. Markup right here. Okay, let's try that again. Let's go red. Okay. So this right here is what I'm talking about, the spring. And just look at this schematic. Just pay attention to this, okay? Because I'm not gonna. Well, let's see. Can we split screen? Can we do that? I'm really trying to see if. All right, let's try this. I don't want to completely torpedo the stream. Oh no, that's not what I want. Hold on 1 second, guys. I think I'm figuring this out. I'm almost there. Okay, I think we got it. Okay, here we go. Look at that. Okay, now let me make sure you guys can see this. Okay, you cannot see that. Well, let me make sure. Let me see. Okay, you can only see that. Yeah, you can't really see. You can't really see what I'm trying to show you. Okay, let's try that again. Let's try this again. I think I know what I should do. Let's do this. Let's do this. Sorry, I didn't plan to do this, so this is why I'm not prepared. But I'm going to figure it out because the way I do these shows is I really kind of do it extemporaneously. I have a general theme that I want to discuss. It's usually, something that I put in the title, and then I just go, and then it takes me wherever it takes me. And that's kind of how a lot of things come out. I don't, try to overthink it. I just do it, and then a lot of times I'm pleasantly surprised with the analyses and the conclusions. So for those of you who are like, how are you so unprepared? That's why. I prepare to be unprepared to a certain extent. All right. Obviously, we're always prepared because I'm literally always looking at the charts, and I'm always thinking about, how to do things. Okay. So let's do it like this. All right. This is what I want to show you. So we've got it here. You should be able to see this. Should be able to see this. Let's see. Okay, now you should be able to see it for sure. And now let's do this. Boom. Okay, so we're just gonna go back and forth, guys. Okay, so you look at phase C, just like Amazing Videos of the World was saying in the chat. Look at phase C and look at the spring and the test. Okay, look at this Y accumulation schematic number 1. Okay, just burn it in your head. It basically looks like a big W, okay? You come down, secondary, what's it called? Secondary climax, primary spring, secondary climax, secondary test, automatic rally, all that stuff, right? And then you have a spring and a test, last point of supply, and then a sign of strength, all of that stuff. This is what it looks like, okay? So phase C, basically this is the bottom, okay? So this accumulation schematic in Wyckoff really shows how you go and make a lower low, And now I want you to look at Bitcoin, okay? Actually, specifically, let's focus on this, okay? Let's go on the hourly time frame. And focus on this right here, okay? I'm just going to go back and forth just so you guys really get it. Okay? Do you see that? Okay, look at this. Now look at this. Now look at this. Now look at this. Do you see any similarities? This is an accumulation range. Okay? Let's now go back to our Bitcoin chart and let's work. Okay? The accumulation range happens, and obviously I'm not a Wyckoff trader. I'm not a Wyckoff specialist. I dabble in Wyckoff. It interests me, but obviously I do see the similarity in the accumulation schematic and this actual pattern on the hourly time frame, where you're going down, you go up for an automatic rally, which we call in Elliott wave theory an A wave, okay? And that's how we labeled it, okay? And then you come down. I like the simplicity and the elegance of Elliott wave, but Wyckoff's fine as well. But you see in Wyckoff you have that 1, 2, 3 B wave flat correction. Whoops. Yeah, B wave flat correction that you see there. And then at the end of the B wave flat correction, what do you see? You see this, which would be phase C, right? A secondary test, right? If you will. A secondary test spring from the bottom of the range. But what I really want you to pay attention to is look how the spring breaks the plane, the bottom plane of the range. Again, remember this is a schematic. I've studied Wyckoff, so I understand that not all of the examples, real world examples, will follow this exactly. Some people who kind of don't really study in depth, they think it has to look exactly like this and they try to superimpose it exactly. No. This is just a schematic, kind of like in Elliott wave, where we show 5 waves up, right? And it looks really nice and clean, and 3 waves down looks really nice and clean. But in actual practice, it looks a little more messy. It looks a little more complicated. This is the same thing. But the idea, the concept is important. That's what you should really be taking home. The fact that the spring breaks the plane of the bottom support. Okay, keep that in mind. And then right after that, you basically do a consolidation, right, at support, and then you start going up impulsively, right? So now, back to Bitcoin. And guys, if you're getting value, please like, share, and subscribe. Back to Bitcoin. On the smaller time frame, you can see that you got exactly that. Right when you got down here, you started going up, and perhaps you come down and go up, come down, go up. That's all possible, right? And we know in terms of Elliott wave theory, you can go up impulsively or you can go up correctively. You can go up in a leading diagonal. You can go up in a flat correction. You can go up in an impulse, right? 3 waves, 5 waves up, 3 waves down, 3 waves down, 5 waves up, 3 waves down. Like, you can go up a manner of ways. But essentially, what Wyckoff is saying is that this bottom was a bottom. And in Bitcoin, you kind of didn't break the plane. Okay, the spring doesn't always have to break the plane. Okay, at least on this time frame, it didn't break the plane. But what we should expect from this pattern is a sort of matriculation, a steady matriculation up and through to the top of the range, and eventually at the top of the range, a sign of strength, right? SOS, a sign of strength. Consolidating at the top of the range before a blast off, okay? So that's what it shows. Basically, don't be surprised if what you see here is something like this, where you make your way up here, and then up here you do something like this before you go up, Okay, so this is what Wyckoff is enlightening us with. Very interesting. Now, I actually didn't intend to show you the hourly time frame, the most recent price action of what was happening in Bitcoin, comparing it to Wyckoff. Actually, what made me think of Wyckoff was what's happening is what happened rather on the higher time frames. Okay, the higher time frame, right? As I said in the beginning of the live stream, is we broke the bottom plane. Most analysts, most indicators will tell you that this is extremely bearish. Okay, let me tell you something. If you use an indicator to trade, right? It's an algorithm, and it's using maybe like a sort of moving average, or maybe it's using volume, but usually it uses a combination of moving averages and MACDs and whatever. It uses a constellation of indicators to spit out a buy or sell signal, okay, or bullish or bearish signal. Let me give you an example. Here you go. Here's one built into TradingView. I don't know if you guys know about this, but this is an oscillator. These are indicators, right? They just tell you, on the 1 day, on the hourly, let's say, because we've been looking at the hourly, it says sell and strong sell, right? Strong sell. Most indicators are going to say this because, and they tell you exactly how they work. They use all of these different indicators and they put them together, and the computer sees, okay, which one of you all, based off of this, what should you do? If enough of them say sell, right, then it's altogether sell, right? Do you understand? 3 indicators say sell, 8 say neutral, 0 say buy for the oscillators. So you should sell. 17 all together. 17 say sell, 9 are neutral, 0 are buy, right? Indicators won't be able to read bottoms. They're only able to read impulse because it hasn't happened yet. Again, let me say this again. Indicators are not able to read bottoms. They're only able to read impulse because it hasn't happened yet. They're not as sophisticated as people pretend or believe that they are. This is why you can't get around knowing how to read price action. Okay? And this is why, instead of relying on indicators, learn a trade like a Elliott wave or a Wyckoff. And Wyckoff shows you that if you break below the range of this accumulation range, okay? Again, you come down, you put in an automatic rally. Then you come down, and sometimes you have a secondary test, and you have what's called a spring, right? And you can have multiple springs. And then finally, what you do is you make your way slowly but surely up and through that trading range, okay? And again, it looks like I'm showing you a repeat, but guys, this is the 4-hourly time frame. What I showed you in the beginning of this live stream was the hourly time frame over here. Do you see kind of how it's all fractalized? It's a repeating thing. Except this this spring is more accentuated than the previous spring. And I believe that, the whole FTX collapse really made this spring more accentuated. It doesn't really matter, though, to be honest. Why? As long as Bitcoin fundamentally is sound and it's not rugging, then we can talk only technicals, okay? If all of the supply is going to be sold, or it has little supply, little liquidity, all that stuff, then, it's like, let's not even bother with technicals, because it's just going to break supports that it's not supposed to break and all that stuff. But now, because it's Bitcoin, it's a sound fundamental asset with strong fundamentals, even the FTX collapse isn't going to make it revert from the usual patterns that we see in technical analysis. This is why we can use technical analysis to prognosticate on its price action. So here you have a spring, and I think this is what this is, okay? And a lot of people are misreading it. A lot of indicators, as you can see, are misreading this as a bearish continuation. Now, very quickly, Why is it not a bearish continuation, you ask? Because, you would say, well, Dean, if you break support, right, just keep things simple. You break support, that is a bearish signal. And I'd agree with you. Technically, yes. You break support, you retest it as resistance, and you continue to the downside. That's usually how it works. However, here's why this is different. And this is not as cut and dry a break of support as you may think. Let's zoom in. Okay, you can't really see it in Bitcoin yet. But this break of support created an impulse, okay? And this impulse, and I said this yesterday. Actually, you can see it in Bitcoin already. I said this yesterday. This is really, really, really important. And this is kind of high-level stuff. It's a high-level point, meaning it's not something that most, beginner analysts, most beginner Elliottians, they're not going to make this observation. But it is absolutely crucial. So what we want to do is look at this and try and figure out, like, well, is this 1, 2, 3, 4, 5? This is an impulse, okay? There's no way. I can't draw that in. Let's do it properly. This is an impulse, and I don't think that this is a hard read, okay? Wave 1, wave 2 took about as long as wave 1 right here, you see? And wave 2 came up to about the 0.618, between the 382 and the 618 of wave 1. Go down to wave 3. Wave 3 is about 161.8% of wave 1. Looks good, right? Wave 4 comes up, a little more complex than wave 2, and then wave 5 goes all the way down. It's a really sharp impulse, right? It's quick. It's a quick hit, okay? How do you know, right? So as a beginner Elliottician and a beginner technical analyst, people think, well, oh, that's an impulse. What comes after is going to be wave 2. And then you're going to continue for wave 3, and then up for wave 4, and then down for wave 5. If you know Elliott wave really well, you know that that's already off the books. Why? Very simply, waves of the same degree are comparable in time and in price, okay? Waves of the same degree are comparable in time and in price. I said this yesterday, and this is a very important point. So if you take this whole thing, it's about a 4-day, 11-hour move, okay? Let's see. It's already 4 days and 20 hours here, okay? And it has yet to complete the move, okay? So right here is 4 days and 20 hours. Let's see. Yeah, right here is 4 days and 20 hours. And the move is not yet complete. What do I mean by that? So the move would be, you get a 3-wave move, right, in wave 2. That's 1, 2, 3. Okay? The move's not yet complete. And if the move's not yet complete, meaning we haven't even come up and finished this flat correction, then it's highly unlikely that this is of the same degree as this. These are likely on different degrees because this is corrective. This is something and this is something else altogether. So that means instead of looking at this as wave 1, wave 2, this is wave A, wave B. Or sorry, it could be a wave A or wave B, or it could be this is just an impulse because it's the last wave of whatever 3-wave move that was. And this right here is different in and of itself. It's a consolidation reversal pattern. That's how we've been reading it. Okay? At the bottom as a consolidation reversal pattern. So this is important. What is important also is to do this not just in Bitcoin but throughout the market. Because it's not only Bitcoin that gives you hints, okay? And maybe other assets tell you this story even more pronounced, okay? So let's say you look at Polkadot and you look at that strong impulse, okay? From the top to the bottom, that's 2 days and 4 hours, yeah? From here to here, already it's 4 days and 12 hours. These two things, according to basic Elliott wave analysis, can no longer be, okay, sorry, whatever this is. So this and that, they're not of the same degree. It's not wave 1, wave 2. Okay, this is very, very, very helpful. It's a small detail, but it's actually huge when you're doing your analysis, trying to figure out, okay, what's what? Because you see 5 waves, but you sometimes don't know. It's 5 waves of what? Is it 5 waves the end of a corrective move? Or is it 5 waves the beginning of an impulsive move? And there are little tips and tricks, if you really know your Elliott wave theory, that help you understand what something is likely versus what it's not. Okay? So we know that this has to be different, and the most likely explanation is that this is once again the end of this right here. Let's just show this. So this is likely the end of this B wave or counter corrective wave. 1, 2, 3. Okay, you see 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. Okay, it's a 3, 3, 5 flat correction. And so this is separate from this. And this must then be a consolidation reversal pattern, which is an entirely different mode altogether. Does that make sense? This is how I'm doing that analysis, and this is why it's highly probable that this bottom right here is not just a consolidation, intra-wave consolidation for more downside. You know, people are reading this out of context because, you know, maybe they don't have the understanding of Elliott wave or whatever else they're using to really understand what this impulse is, what it means, in what context can you read it, right? Nobody knows 100%, but we're using understandings and basic principles to really elucidate our reads. So that's why it's really important. Learn as well as you can. If it's Wyckoff, if it's Elliott wave, learn as well as you can. It does definitely pay off. And here again is another example of a spring, okay? You have your automatic rally, boom, your secondary test, you come down for a spring or maybe another secondary test, or maybe this is a spring, this is a secondary spring, right? These are springs right below the trading support, okay? So this is what we're seeing, and again, all of this, if you look at it through the lens of Wyckoff's accumulation schematic, gives you that understanding, okay? So yeah, that's a very important point, very important thing to understand, because a lot of people, a lot of analysts are seeing this as this is it, you know, this is not going to go up, right? This is basically going to continue down. But in our analysis, using Elliott wave theory, using what the DXY is doing, using also Bitcoin dominance, it's likely that this is the crucial support that we bounced off of. We're creating a double bottom here for an impulsive wave. And here on the smaller time frame, even smaller time frame, looks like we got, let's go on the 15-minute time frame. Now this is definitely, all right, what do you know about this? This is, well, actually, you know what? So on the small time frame, what do you see? It looks like we have 5 waves up, okay? And it looks like we have 3 waves down. And those 3 waves down just about respected the 0618. And what else is important about these 5 waves up and these 3 waves down? You see some symmetry in time? I do. So it looks like 7 hours and 15 minutes to go up, and it looks like about 6 hours and 45 minutes to go down. I would say the time up is approximately the same as the time down. So this is right now, as it stands, at this very moment, this can be our first 5 wave up, 3 wave down clean impulse in Bitcoin. Okay? So what we're going to do, let's say that's a theory. Let's say, okay, maybe we have something here. Maybe we have our first Elliott wave impulse. We've changed modes from this previous accumulation, consolidation, reversal, AB base mode to impulsive mode. Maybe that started right here on November 14th at midnight at 0045, right? 12:45 Eastern Standard Time. That's a theory. But for that to happen, we literally have to go up right now, or within the next 15 minutes or something like that, right? And we have to break this plane. And if that happens, then this is likely it, okay? Now, let's look at other assets to see if they're kind of telling us the same thing, okay? So Polkadot, what do you see? You see something that looks like 5 waves up and something that looks like 3 waves down, okay? It's a little bit of a different 3-wave correction. This one's more like a flat composed correction instead of a zigzag, okay? Kind of like what you see in Bitcoin, but all the same. What's important here is that we measure the time it took to go up, 5 waves, okay? And that was about 9 hours. And now the time it took to come down in the 3 waves, it's about 6 hours and 45 minutes. So maybe not, okay? And again, not everything, just because something's happening in one asset, it doesn't mean the exact same thing is happening in the other asset. However, what I've seen is, usually what happens in the market, cryptocurrency markets, is if things are going up, everything's going up. But not everything's going up in the same way or for the same reasons. Some things may be going up correctively on a small time frame. Other things may be going up impulsively on a small time frame. But they're all eventually going up, okay? So as I'm reading this price action, and if I'm reading it correctly, maybe I'm not. Let's see. Does wave 5 end here? Let's see. Let's do that again. Let's try that again. Let's say, no, that doesn't work at all. That's, it could be. Yeah, it could be. In any case, one of two things. One of two things. I want to say, just upon brief analysis, that this is the 5-wave move up. It took 9 hours. And so, if this is our 3-wave move down, I believe it should also take around 9 hours. So I'm expecting it only to go this evening, if that does indeed happen for Polkadot, okay? If it doesn't necessarily mean it can't go. It just means it's probably an A-B situation, which is a zigzag, which is perfectly fine. It could still go up. It's just not a pure impulsive price action. Do you see, guys, how this is tricky? It can be very, very tricky, and you can't necessarily assume that just because Bitcoin's doing one thing, everything else is doing the same exact thing in the same way, right? So yeah, let's move on. I'm gonna leave that timestamp on there. So Cardano, it looks like a 5-wave move. Whoops, that's not what I wanted. Actually, I do want that because I want to see if this is respected the 0618. But is that the end of wave 5? I think this is the end of wave 5, isn't it? Okay, you know what? If that is indeed the move right here, then this may very well be a flat correction. And so I would not be surprised if we came down here. At least, okay? In any case, this is quite bullish, right? It's bullish because this initial break of structure, again, is something that initiates or indicates the larger move up. Remember, all these corrective waves happen in 3 waves, or in phases of 3. This is the first phase. Maybe this is like this. This is possible. Okay? This looks very corrective to me. It does not look impulsive. I'll say that. Just the way it is, based off of my experience, this looks like another corrective. Looks like that. Okay? But in any case, in the larger scheme of things, we don't really have to say, oh, it has to be impulsive down here. No. What's important is that in the scheme of things, you're still establishing that channel of consolidation reversal. You came down, you went up, tested the top, tested the bottom, went up, down, for a spring, and you should, in some way, shape, or form, find your way going up like that. Okay? So, just looking at Cardano right there, just wouldn't be surprised if Bitcoin were also putting in the same type of flat correction, irrespective of the time it took for both the waves up and the waves down. Actually, looking at it right now, I think this is the read. This is what I think is most likely. Let's go on the 15-minute time frame. I think it's a flat correction right here. And I think, and I'll say this, the first time we get an impulse, you won't have to ask. It'll be massive. It'll be massive. It won't be a little one like this. So none of these are actual impulsive waves. Like the true impulse in the bull market will be unmistakable. And until then, we can safely say these are corrective waves. Okay, as long as we correct in the right direction, it's fine. Let's see. Yeah, I think this is some sort of flat correction like this. The way down is boom, boom, boom. Something like that, yeah? So I'd pull it from here, actually. Yeah, I think it's a flat correction. So I do not think that this is purely impulsive, irrespective of the time taken. I think these are flat corrections. These are, again, pivots, just, that never-ending sequence of A-B basing. It's one after the other. It seems like it never ends. But I think that's what you're getting over here. Let's see. Okay. So in that same light, let's look at Polkadot again, and in that way, I would say that this is the base right here. And that this is wave A, wave B, and then wave C is probably going to come down here It has to come down to the 786. Why do we know that? Because it's a flat correction. It has to come to at least the 786. It has to come down here in a flat correction. Okay. Cardano, I think, is doing it. It's doing it sooner. Let's see. Something like this. And then here we go. A, B, C, something like that, yeah? But again, you're going to see that if these are flat corrections, you're going to have to at least hit this 786. So it just seems like, you know, for people who don't read price action and really don't have a subtle understanding of it, it's just like, what are we doing and where are we going? Are we going up or down? Because we just seem to be going up and down and up and down and up and down, right? And this is exactly what you do in consolidation reversal. That's the whole point of the consolidation reversal mode. It's to literally be bound by a channel and go up and down. That's how you accumulate positions for a move in any direction. You accumulate buys and sells. You give buyers and sellers the opportunity to accumulate in a certain price range before marking up or down. So that's the entire reason you can see these seemingly endless series of consolidation reversals. Yeah. Reserve rights, same thing. You see here, this was actually a zigzag. It looks like you're getting something like this. It may come down here. May respect the 0618. I don't know. Even though the base is like this may make for a kind of zigzag again. So I would say this is kind of what I would expect out of RSR. Dodo. Yeah, see, this is quite clear, yeah? This is a three-wave move here. I'm just going to put this in free-handed. This is a three-wave move here. This is a three-wave move down to the 786. It's a flat correction. This is another three-wave move. This is another three-wave move down to the 786. I believe it's the 786. Yeah, about the 786. Or should I pull it from here? Yeah, it's hard to say. But these are series of consolidation reversal patterns for sure, right? All you see here is just up, down, right? Up in three waves, down in three waves, up in three waves, down in three waves, or up in five waves, down in three waves, up in five waves, down in three waves. And then there's also the possibility, mind you, that you may be putting in a leading diagonal, okay? 5 waves, 3 waves, 5 waves, 3 waves. We've seen it before, and then all of a sudden you pop, okay? And that's how you get those unsuspecting pumps. And this is why it's important to accumulate at support, because you never know how and when they're going to go. We have all of these principles and guidelines and sort of understanding of price action, but because of just the nature of price action and the nature of the different permutations, combinations is very difficult to say this is it's exactly what's happening. Could be a million things happening. You just have to get a decent idea and get in roughly at support and get out roughly at resistance. That's the name of the game. But I wouldn't be surprised if Dodo, by the way, was putting in a leading diagonal. Wouldn't be surprised if all of a sudden it started going, oh, look at synthetics. Look at synthetics. So synthetics, I'm just going to jump ahead. You can see very clearly what happened with synthetics. It was in this, and this was a big loser yesterday and the day before, actually. It put in this 5-wave move, right? Of which this is wave 4 very clearly. It's the penultimate wave, right? Okay. So you put in that automatic rally using Wyckoff terms, targeting wave 4 of the previous trend, right? That's your initial break of structure. You put in a 3-wave counter to that. A 3-wave counter, and actually that 3-wave counter was 1, 2, 3, all the way down here, okay? And you can count 5 waves here, actually. 1, 2, 3, 4, 5, okay? That, resulted in a B wave. That's a counter wave, okay? Essentially. And then from here, you had a series of AB bases for the second degree AB basing and a breakout. Boom, okay? And now what you should see on the smaller time frames, or even, I guess the smaller time frames, is the volume show you that that breakout is legit, okay? So this volume right here, this volume candle should grow larger and larger and larger and not tail off, okay? Because it's impulsive. It should just grow larger and larger and larger. And you can see here a 3-wave move, a 3-wave, or actually, you know what? This was a 5-wave move, a 3-wave move. Or was it? Yeah, 5-wave move, 3-wave move into what may be actual bull mode impulse, bull mode impulsive price action. Okay, it's very, very possible. That's what's happening with synthetics. It's funny because the past couple days I'm in this position. If it's on this watch list, I'm in the position, and it was the worst performer. And I guess it was just finishing out, making its bottom first. So this very well may be the first move in the whole bull market. And let's look at this now in context of what we were saying before. Let's get rid of the volume. Don't need that right now. So the idea is, again, you see this move. Let's say you don't know anything about what comes beforehand, right? Let's say you're just on this time frame, this hourly time frame, and you're like, okay, looks like, a lot of people think like this. This is a trend. Whatever's happening here is just going to be an intra-wave correction, and then we're going to continue the trend, right? It's going to be like a bear flag, like this, right? A lot of people think like that. And so they're trading for that. They're waiting for that. Their indicators are also telling them that, because their indicators can't read the future, especially when this consolidation is happening, okay? So, and let's say they know a little Elliott wave. They say, oh, this is clearly 5 waves, and they're actually correct. 1, 2, 3, 4, 5. Very, very nice, beautiful 5-wave sequence. But just like we said with Bitcoin and Polkadot, look how long it took for these 5 waves to form. And this is like, this is just objective data, evidence to let you know what's likely happening. You never know 100%, but it's just what's likely happening and what's likely not happening. Okay, if it takes you 2 days and 7 hours to go down impulsively, okay, which that clearly is a 5-wave impulse, you can even measure it, and it takes you now all of twice as long, right? We don't have to measure it. It's 4 days and 21 hours at this point. It's not, it's unlikely, and it's highly, highly, highly unlikely that if this is a wave one, if this is a wave one, that this is a wave two. It doesn't work that way. Waves of the same degree are comparable in time and in price. How do we use this? We typically use this with wave one and wave two, which tend to be very similar in time. Okay? Wave four, hard to measure. Wave four sometimes takes so much longer than wave three and wave two and all that stuff. So we typically don't use that with wave four. Okay? But wave one and wave two typically take the same amount of time. That's why that's our tell for a wave one and wave two. That's why you always see me measuring the time it takes for wave one vis-a-vis wave two, and vice versa. This is not a wave one, wave two situation. Then what is it? Okay, zooming out on the 4 hourly time frame, just like we did with Bitcoin. The likely read is that this is the last wave. This right here, right, is the last wave of a B wave. Okay, this was your A wave. Okay, and this was your B wave. 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. That's a flat correction. Okay, sorry, maybe it's a zigzag. It's more of a zigzag. Okay. Actually, yeah, more of a zigzag. So it's 5, 3, 5, like that. Okay. I think that's the read. In any case, it's this impulse belongs to this pattern. That's a 3-wave move. That's a 3-wave move, and then whatever you put here is a consolidation reversal for your 5-wave move, and that completes this entire consolidation reversal. Right? Again, you can have subjectivity, you can want it to happen, but at the same time, you cannot make up facts. And sometimes they're just facts, things that are evident in the chart. And the time it took for that wave one and that wave two, those are evident. So that's how I would read that in synthetics, and would not be surprised if this were the bull rally beginning in synthetics, the bottom of the bull rally. So I would want to see, what would I really like to see? For this to quickly go up. Okay, if it's, again, just like I said a few moments ago, bull market rallies and actual bull market impulse, like proper impulsive price action, isn't slow. It doesn't take too long. So if it is, you'll just see it go up and 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 quickly hit resistances that it's supposed to work on. It's not just going to hang out, right? So the time it takes, and then obviously the volume, you'll see the volume corroborate all of this. You know, the volume will pop. But yeah, I did not know that when I first started trading and charting Elliott wave theory. I didn't know that there was a time component. And so for me, this was, I would have thought this was a 5-wave move and a 3-wave move, and then you just continue. I didn't know any better. But that's not how it works. Okay. So we did synthetics. Cool. Let's go back to where we were. I think we were at, reserve rights. We just finished that. Let's do Dodo. Oh, no, we did Dodo. Ethereum. That's what we're on. So Ethereum is one of those few assets that I think put in 5 waves and has since done its B waves, but respected the 0618 because it put in 5 waves. So on a smaller time frame, looks like you're getting another 5-wave, 3-wave move, right? Going up in 5 waves, going down in 3 waves. But again, this is corrective, right? One, because it hasn't gone anywhere. You know it's not impulsive. And two, because the time it took for this to come up is much shorter than the time it took for this to come down. So in any case, that impulse, when it comes in, it comes in, but it won't be like, oh, is this the impulse, right? It won't be ambiguous. Unambiguous, okay? So that's what we're looking for. That's what we're expecting. Zilliqa, once again, you're at support. You double bottomed. Right? Very important, this double bottom. Very important. And here, you kind of put in a spring, a lower low. Okay? You put in your lower low, and you come up in what seems to be 5 waves, and now you're putting in a version of 3 waves, but again, it's corrective, and I think this leads into impulsive price action, right? I think we get this sooner than later, okay? I think synthetics is leading the charge, but you're going to see a lot more assets do exactly that. I think it's right. It's really like, we're right there, okay? We're right there. I know we've been saying this for quite some time, but, trading is a game of patience. It really takes a huge amount of patience and persistence. It's a big game of attrition. So again, here, looking at Dogecoin, again, 5 waves up, 3 waves down, 5 waves up, 3 waves down. In every case, you look at Dogecoin, you're respecting the 0618. You're respecting the 0618. I think it's just a series of zigzags that you're getting, right, on smaller time frames, and eventually you're going to get that move. And this whole thing is a big consolidation reversal. Okay, same thing with Binance, looking good. Okay, we put this, these A waves, these corrective moves in, but essentially you're holding support with a series of AB bases. Okay, this is an hourly time frame. You could kind of look at the 4-hourly time frame and look at all of this on a higher time frame. But, A wave, B wave. Oh, no. I'm trying to read this. 1 second. Okay, here we go. I got it. This is the B wave, and this is the secondary A wave. It starts here. Okay, and this is the secondary B wave. And this is a pivot, I think. This is a pivot. But it's just a series of AB bases. And again, just like Wyckoff shows, you go up, you go down, you go up. Sorry. You go down, and you go down a little low, up, down, and then finally up. Make a sign of strength, and then you break the range. Okay, Litecoin, like Dogecoin, like Ethereum. I think here is 5-wave. It's a 5-wave situation, 3-wave situation down. You're respecting the 0618. So far so good. And then smaller time frame, 5-wave situation, 3-wave situation. Again, respecting the 0618. Wouldn't be surprised if we got to move sooner than later. Synthetics we already looked at. And again, this is what you want to see. Hurry up. Impulses quickly meet resistances. The only thing that stops them, resistances. And once they get to resistances, they consolidate a bit, and then they keep going, and they hit the next resistance. consolidate, hit the next resistance, and they keep going, keep going, keep going. So this is what we're seeing. That's a really good sign. Within, let's see. And notice what it did before it pumped. It put in that leading diagonal that we talked about. So a good sign is 11% in less than an hour. Okay, that's a good sign for pure impulse. That's about the rate you can expect to go, that and faster in the bull market. Okay, Algorand looks like let's go on the hourly time frame. Okay, here you put in that spring. You put in that Wyckoff spring, right? You come down, put in your automatic rally, you test the bottom, you test the bottom of the bottom, or below the support for extra liquidity. You come up, probably going to do something like this before you go up. Okay, it's looking good. Everything is looking good. You're actually looking bullish, but the indicators aren't going to show you, because the indicators can't read price action. The indicators can only read other indicators. So just understand that. And guys, that's it. I'm looking at Bitcoin again on a smaller time frame, and then let's call it a stream. Actually, before we leave, let's obviously look at the DXY and look at Bitcoin dominance. Those are major indicators. So the DXY, we saw it yesterday at Sunday at the open, gap up, and since then it went up and came right back down. Okay. So we can expect it to continue down on the hourly time frame. The momentum indicator seems to be going down. The 4-hourly time frame looks like it's in overbought territory, but still going up a bit. Yeah. But what's important is this: on the small time frames, right? On the small time frames, there may be some sort of little consolidations happening, but by and large, the DXY is in free fall. Okay, so as you can see in the SPX and traditional stocks, you should generally be seeing upwards momentum. So what you're gonna see in Bitcoin and all the rest of the cryptos, they're gonna keep going up, and the DXY is going to go down accordingly. And sometimes it's gonna stop and breathe, but it's gonna continue to go down. So this is not something that we necessarily need to pay attention to as carefully as we did before, because generally speaking, it's in an impulsive downtrend, and so we can expect cryptos to respond accordingly, when they're ready to. But the trend has been the precursors, the stage is set. This is what I mean to say. The stage is set. Now, great sign here on Bitcoin dominance, as you can see. Okay, again, Bitcoin dominance, we want it to go down as well. That tells us when a bull market is. Amazing videos of the world. You were asking when will we get a altcoin bull market? When this goes down. That's exactly when. That's exactly what this chart means. Instead of looking at all of the different altcoins, and we can look at a few altcoins, that altcoins move when this goes down. That means that Bitcoin's losing strength. It's losing market cap vis-a-vis other assets in the cryptocurrency space. So this is exactly what we want to see. And it looks like we put in some sort of A-B situation, right? it looks like we put in some sort of impulse correction back to impulse. Okay, and I don't want to know. I don't know if it's a wave one, wave two situation, just because again this has taken a little bit of time and this has taken a lot more time. So it may be some type of zigzag AB situation. So yeah, those are our main indicators, and they're looking good for continuation to the upside. Okay, before we leave, look, already up 17%. That's what we like to see. That's what we like to see. That's part of why it's on my roster. I wanted one of those assets that when it pumps, it just pumps. I love those. Now, obviously, it's not the. I think synthetic assets, right? Tokenizing everything on the blockchain, it's a possible thing that can happen. But I'm trading it on leverage. But I do think that there's a future in it, and I think fundamentally it's a great idea. I just don't know if that's the kind of future that we'll have. But this is very, very promising, and I've looked at synthetics as a project from afar. I just always liked how when it did move bullishly, how it moved. I loved it, and I'd never been invested. So I told myself, okay, if I do make a new portfolio, I'm going to want some of that. I want some exposure to that, because I always feel a little bit of FOMO when it pumps. But now I'm enjoying the feeling of watching it pump, and it feels good. Okay, let's see if anything else is moving. Okay, we know that in a crypto bull market, Bitcoin's not going to be the first one out the gates. Okay, so Bitcoin's going to be not necessarily the last, but maybe one of the latter movers. Okay, so let's see. It looks like synthetics is the top mover in my particular watch list. XRP is also starting to move, okay? And again, same idea. You have this range, you came down, you retested, come down, up, down all the way, test the bottom of the channel, and then go up correctively, and now you start the impulse. If you study Wyckoff, you can read these things. So XRP starting to move, Gitcoin's about to move, Solana is as well, DYDX. Let's see. Things are getting ready to go. It's been a long fucking bear market, guys. It's been so long. It was so long, it felt like we were never going to get this bull market. Osman, yeah, I just saw XRP. Osman says, Hiding XRP also just started to move. I swear, it felt like it was never going to come. I just, it really takes a lot of persistence, perseverance, and really takes a lot of mental fortitude, because you need to know, okay, I'm going to stick with this, and some days I'm like, what the hell am I doing? Like, let me go get a real job. This sucks. I'm just gonna check KDA for Osman real quick. Yeah, it looks good. It looks fine. It's just, do you see how it's exhibiting more weakness than other assets, but essentially the integrity of this channel is all the same. It's still there, right? Automatic rally, you come down, you do a spring, and you're basically coming up like this. Synthetics did something similar, actually. It went below the bottom of its consolidation range, but it's looking fine for continuation, Osman. Let's see. I'm just gonna check the. Oh, I want to show you one thing. First, let's look at crypto bubbles, and then I'm gonna look at something else for you. We're going to look at the CBBI index, which is at a 2, and I've never seen it at a 2 before. This is literally epic, historic. Okay, so like we just saw, synthetics and XRP are some of the biggest movers in the top 100. Okay. Top 200, MDX, SXP, I don't even know what that is. DESO. And guys, mind you, while these are moving, most analysts, not every, but most analysts, most mainstream analysts are telling you how the market's dumping, or how the market was going to dump, at least this morning, right? Because this just started to happen. So things are starting to go up double digits, but they were telling you new lows, okay? Not just because, you know, they're reading a bear flag and they don't know how to read sort of, you know, that impulse that we're looking at. They think it's part and parcel of a larger move down, but also the macro environment. People are saying, well, because of FTX and this and that, you know, it's unlikely that we move anytime soon. I'm really sorry for anybody that was involved in the FTX, Solana, Serum, anything that was Alameda FTX related. My heart goes out to those people. You know, a lot of times, you know, we dodge bullets. It's not because we're smarter than others. Yeah, there's something to be said for, you know, vetting projects, but it's just, there's so many scams and there's so many bad actors. It's hard to skate, you know. I was this close to putting my money on Celsius, a lot of money on Celsius. And not just my money, but my family's money too. I dodged the bullet. So sometimes you just get lucky. Kin, up 60%. It's cool. Math, I don't know what that is. There's so many freaking projects I have no idea of. Okay, so I wanted to show you that, and then the other thing, let's just check to see if there's anything else that moved. Okay, still synthetics, XRP, that kind of stuff. I'm just focused on my guys, my movers and shakers, my watch list. Looks like XRP is retesting this right here. Or sorry, Litecoin. Okay. Yes, I wanted to show you one thing. CBBI index. If you don't know what the CBBI index is, it's something that, it's one of the first things I looked at when I was, you know, when I started doing technical analysis, and it's really, really good. Okay, it's something that, you know, you should definitely look into. I've talked about it before on the channel. It's the Colin Talks Crypto Bitcoin Bull Run Index, and it's essentially just a it's a collection of different metrics, really, really high quality metrics, all put together, and then once they're put together, they're given an aggregate score of how close we are to the top. Okay, so the 100 is the closest thing to, we're at the top, sell. Okay, so you typically sell, if you use this CBBI index, anything between 90 to 100, Bitcoin being between 90 and 100, you want to sell. Okay, so when we're at like 60,000, we hung out. I think you can see it here. When we were at 60, where was it? Sorry, I'm not looking. Or yeah, here it is. Here it is. When we were at 69,000, you can see we were in the 80s. Actually, we're in the 80s. Okay, so we were quite high, right? but then we went all the way down to 2. This has never gone to 2. Oh, actually, it's gone to 1 before. That's a lie. I never thought it went, but it's like only once before in history has it gone down this low. It's literally at 2. Literally, this is the lowest it can possibly go. And so again, 100 or 80 to 100 is high, right? Meaning you should sell your Bitcoin, sell your crypto. And then 1 to 10 is basically you should buy anything and everything crypto related, because we're at the bottom, absolute bottom. So, and if you want to know more information, just go on the website. But it uses like the pi cycle top, Nupal, Rupal, R hodl wave, Pure multiple 2-year moving average, Bitcoin Chololo, MVRV, reserve risk, and the Wooble. Really, really cool project, good work. At some point in time, I'm probably going to make some sort of donation. Not because I use it, but I just look at it and I think it's cool and interesting. So that is the last thing I wanted to show you guys. Yeah, I think we're getting these final moves down before everything else kind of does what synthetics did. So yeah, this is what you want to see in an impulse, an actual impulse. You just go until you hit some sort of resistance, you consolidate a bit, and then you keep going. And then people think it's over, and it's never over. It just keeps going. And that's how we hit these crazy targets that we've talked about, because we just go and go and go and go, and when you're sleeping it's going, when you're eating it's going, when you're in the bathroom it's going, and it doesn't stop. So let's see, Bitcoin kind of consolidating there. Litecoin seemingly finding some sort of, is that a let's see, where is it? I'd say it's over here. I think Litecoin comes down a little further, or is, yeah, I think it comes down a little further, down to at least this point. Yeah, I mean, we should start having fun again very, very soon. Just judging by the market, judging by, some of these movers, the XRPs of the world. Yeah, this is exciting. And again, you should see this all backed by volume. See, you should see volume come up. Boom. Exciting, exciting, exciting. Guys, have fun in the market today. Be safe, as always. It was a pleasure, and I'll see you tomorrow. Bye.